Hello guys, today I have a different video for you. Since this weekend was the Berkshire Hathaway annual meeting and I really like Warren Buffett, I wanted to talk to you about two different things. I know most of you guys investors are watching the videos and the highlights of Warren Buffett and Charlie Munger at Berkshire Hathaway meeting. uh, I wanted to bring you two topics that I've read in the Warren Buffett shareholder letter. So there we are. Let's start. So here we have the Warren Buffett shareholder letter that he wrote at 6th of May of this year. Um, so one thing that announces me is like one thing he talks. So if you know the history of Berkshire Hathaway and Warren Buffett, you know that Warren Buffett started to buy business at a really cheap price. Some of these companies were really bad. He started in the textile industry, uh, and that is a really bad business. But one thing he talks here comes when he knows Charlie Munger. So he says here, in addition to marginal business purchased at cheap price may be attractive as a short-term investment, they are the wrong foundation on which to build a large and enduring enterprise. What he wants to say here, that sometimes buying bad business at cheaper price is not the best option. Even though he started there and make a lot of money doing that, for a long-term perspective, you gain can win a lot more money if you buy good prices. So he says here, from my perspective, though, Charlie's most important architecture fit was the design of today's Berkshire. The blueprint he gave me was simple. He says that. That is a really good quote now, and it's really famous. Forget what you know about buying fair business at a wonderful price. Instead, buy wonderful business at fair price. This is a really famous quote from him. And what I want to tell you guys is that sometimes it's very important to buy a really good company. And if you are a long-term investor like me, and you want to invest in your future, you have to buy companies with a wide moat, companies that have a really good competitive advantage and can continue their growth and improve their margins. So even though you pay a higher price at the moment, in the long term, that will be a good choice for you. And I believe that most of the success Berkshire Hathaway has is to buy good companies, even though they are not cheap. For instance, if you look into one of the biggest holding in Berkshire Hathaway, it's Apple. Even though they bought Apple at a cheap price, I don't know the PE at the moment, but when Buffett bought Apple was not in a good moment. They were trading at a low PE, I believe even lower than 15 PE, but it was a really good company, and it comes to be a really good investment. Um, but that's one thing I want to talk to you. Uh, Another other thing I have here highlighted, it's the when Buffett talks about the next 15 years of Berkshire. Let's read it. Now let's take a look at the road ahead. Bear in mind that if I had attempted 15 years ago to gauge what was coming, certain of my prediction would have been far off the mark. With that warning, I will tell you what I would say to my family today if they ask me about the Berkshire future. See, even Buffett, which is one of the biggest, one of the best investors of our time, maybe it's the best, he doesn't want to talk about the future and make predictions. it's really difficult and it's impossible to predict the future. So what you want to talk about that? You just want to say that it doesn't make sense to try to predict the future. You just want to believe in yourself, to believe in the companies, to study the companies, and believe that they will grow and you will make money. If you buy a good company with a good competitive advantage at a fair price, you will make money. It's like a quote. It says that in the short term, the stock market is a voting machine, and in the long term, it's a weighing machine. So even though sometimes we have stocks, companies trading at a low valuation and under their intrinsic price, that's when you want to buy them. But sometimes you have to find that opportunities and work for that. So one thing he says is, let's read it. Purchases of Berkshire that investors make at a price modestly above the level at which the companies would repurchase its shares, however, should produce gains within a reasonable period of time. Berkshire's directors will only authorize a repurchase at the price they believe to be well below intrinsic value. In our view, that's an essential criterion for repurchase that is often ignored by other managements. See, not all share buybacks is good or are good. You have to repurchase their shares at fair prices below their intrinsic value. So when you see companies like Tesla or Nvidia buying their own shares, which they doesn't do, that's not good. You want to buy and repurchase shares of a company that is trading at below their intrinsic value. That's where you create shareholder value, and that is really important. That is not a criterion just for a company, but even for you, an investor. You have to buy the shares at a fair price or below their intrinsic value, so you can make money. One more thing is that for those investors who plan to sell within a year or two after a purchase, I can offer no assurance whatever the entry price. The stock market is not rational. It's not fair price. You can find all the companies in the stock market at a fair price. There are variance. Sometimes they are below their intrinsic values. Sometimes they are above, and that's why you have opportunities to make money in the stock market. So even Buffett says Berkshire Hathaway will trade at different price ranges. Sometimes they will be under their belief of their intrinsic value, sometimes they will be above. And one more thing he says is, since I know of no way to reliably predict market movements, Buffett doesn't know, so why should you believe you should know? Just invest in the market, and with time you will make gains. I recommend that you purchase Berkshire shares only if you expect to hold them for at least 5 years. See, long-term mentality. Those who seek short-term profits should look elsewhere. He says that about Berkshire and the future of Berkshire Hathaway, but you should look that the same way to other companies, to the stock market. If you want to make short-term profits, you should look elsewhere. You are talking about investment. You should have a long-term mentality, and time is the most precious asset you have. So if you are investing your time, if you are investing your money, you will expect to make money in the future. So that's my key takeaways about the Buffett shareholder letters. We talk about two important things: buying good companies at a fair price, and if you buy good companies, they will compound with time, and you will make money. But you have to buy them at a fair price, not buying Tesla and Nvidia at 100 P's. You have to do your due diligence and evaluate the company, and of course you have to do your research. That's why we do here, and that's what I am trying to achieve here, and try to share my view about companies and about investments. And the other thing is that you can't predict the future, so you have to believe in your process, you have to trust your process, and you have to create your own process to evaluate companies. And here I can't say we are a value investor, growth investor. We are an investor. You can make money in different types of investment, even in the dividend type of investing. So there are opportunities out there in both types of companies. Here we like to do our research and create our own process and trust in, and even making our process better for the future, so we can increase our results. So that's what I want to talk to you guys today, and hope you find this video useful. So see you next time. Bye guys.